So now we're in the market, and then we want to look at basic thing, which we said the most important aspect of the market is the structural trend and able to spot POI. Kind of they call this one POI. This should be for now. System should be area of focus. And then, of course, I don't need to speak too much about these price actions and liquidity concept. And I've said that the market's all about liquidity area, liquidity sweeps, price action. And all of these things depends on the fact that you're looking at where, which is the context, factors, and precision. Now, but there's something we need to bear in mind when you open on the daily chart so that you can have a sniper entry, being that you're looking at the structural bias and at the same time being able to find some of these things. When I open, I want to look at external structure, that's external liquidity, with an area, and then maybe a sweep on it, right? Which has to do with daily high or low, or higher time frame swing high, swing low. These are external liquidity that market can target to take out. Then I want to quickly look at power of three at it so that markets, because sometimes like Euro USD have that behavior. Power of three, all right. CRT, of course, I've talked detail about this on one of the trading, and so we can look at it. Then we want to look at the recent break of structure, all right? And so this recent break of structure is going to give us the high, and the low will give us what we call dealing range. Right? Then PDRs, that's the premium and discount. So probably to find any of these in those area. Then fib levels, of course, to get the dealing range, we have to use the fib level pivot point. Of course, we want to tick tock all of those areas that may be important. So the same thing you probably have on daily, you can have it on 4 hours. And then this thing can still be repeated on 1 hour. But by the time you get to 15 minutes, yes, fine, you're going to be looking for part of three. Yeah, so but it's not going to be. So it's going to be internal liquidity, even 4 hours internal liquidity to an extent. And then 4 hours too can still be external and internal. So we have the 15 minutes, which has to do basically internal sweep, but it's buy side or sell side liquidity, swings high, low, trend lines, equal high, equal low, and then recent break of structure, stocks to find. Then part of three. Now, but CRT is not applicable here because it's too small to get the CRT fib level to apply. M5 to M1, chart focus, internal liquidity sweep, buy side, sell side, session high, low, trend line, equal high, recent break of structure, part of 3 years. That's what we use for entry confirmation. This is our entry confirmation. Entry confirmation at AOF, that is area of focus. Now, this is when we find part of 3 in area of focus is put our entry confirmation. And of course, other as SMC, entry confirmation, fair value gap, inverse fair value gap, right? Other block, breaker block, all right? Market structure shift. I'm not going to talk about other advanced, okay, because you talk about rejection block and all of those PDR. So bearing this in mind, we're going to go to a chart and target those points. that we actually highlighted. So let's look at our gold, starting from gold. So my chart still remain active here. So I'm going to clear off everything, even though the chart still valid, but I'm going to clear up everything. So there we go. This is gold on daily time frame. Very simple. You can't rule out the fact that gold. So if I want to look at the first thing you want to look at is probably to look at, we've talked about the external liquidity, right? External liquidity. And how do I arrive at that? I'm going to use my horizontal ray to mark the yesterday or the previous day high and low. Now, this market is quite dangerous right now, reason being that it's like the previous day low. So look at why is this market dangerous? And I'm going to quickly explain to you why is this market dangerous and it's poised to sell. It's dangerous, it's poised to sell in the sense that you are having, so of course it's struggle, part of 3 here, played out to an extent, but not many will observe it. Remember, we talk about the power of 3. Now, but other pivot point I want to identify were those previous high that was left untouched, with probably this will be equal high. So most time when gold had an equal high down the external level, it always like to travel there to sweep those liquidity. Now, the point you want to now look at yourself to ask is that, where is the market actually going to? Generally, market is still an uptrend. Reason being that this is just a break of structure, up, down, and all of that. So you can see the market return back here, all right, to actually sweep liquidity. This is a kind of internal liquidity on this 1 hour time frame, on this daily time frame, because this is it here. Now, remember we said market's all about, number 1, liquidity area, number 2, sweep of that liquidity, and number 3, price action. So if you look at it, this is a liquidity area. The market had come to sweep it, irrespective of the name we want to give to it, and I haven't swept it, so that could now form a break of structure, right? So having swept it, the market returned. So it means the market returned to create a high. And if it's an uptrend or a downtrend, look at it. First, you want to have is a sweep of liquidity. Second, you want to have is a break of structure. And then third, you want to have is the market reversing back to another block or a fair value gap. And in this case, you can have that the market return back to this point. And so how do I achieve that to arrive at getting this? Because this become a low and a high. So since this one become a low and a high, look at what really happened. Very simple is that I'm going to take my Fibonacci retracement level to mark from this low to this high. In order to achieve where likely do I still want the market to come down to. However, we have the other block that was seated here that the market returned back to. So beautifully speaking, you're able to still curtail within 38 to 78. So which is still in a very good dealing range. And so what happened there is now where you are doing your top-down analysis, but we have no business here, but you have seen the origin of this market. So then there was a break of structure, again, market moving up to this point. So this is a break as this market broke up to this point. Okay, so we have a leftover kind of other block to this point. Very simple. So if this is another block, so then that means from here to here become our new dealing range. So if it's our dealing range, so that means I'm picking from this low to this high to find out possible area this market is going to travel to. So now your question you ask is this, which is the main thing? Remember, we said the market's all about liquidity area, liquidity sweep, and then price action. So here the market had actually So this is like recent break of structure. So here, down here to this point become our new dealing range. So if it's our new dealing range, very simple. So the market need to come down, and it could take several days, and which happened. We have this, but that's not mean we are going to be static, because you're only having all this mind mapping to know where probably you will come back to eventually as the market continues. So these are the things we must understand. So if that's the case, so the market has traveled up here, and then we're expecting, if you look at it from 38 to 78, it's a very good point. But the major area now has to do, can we have a discount? So if you are buying, if you are looking for a buy, you want to have a discount, that is anything below 50% is a good deal. Now, outside that, you have a very bogus fair value gap that occur where from here to this point. So you have to take into consideration that the whole thing and magic happen inside there. Now, probably because this is the past record, and that's when you are going to travel to a lower time frame. So give and take, we now have this point here as the next high. And so funny enough, this is like a breakout structure on daily, but like a sweep of liquidity. So if this sweep was taken, so if you have this sweep taken, then you need to have a breakout structure, meaning that we need to break below this point. And after we break below this point, we now want to look, and then that will be a massive sell. But this is the point. Here was a power of 3. So if I come in some days and I see this power of 3 form, or look at it here, you remember I said it's part of your area you want to look at, practically speaking. So we are now poised and struggle to be here. So what are we having? So here is actually mitigated and become a support, or either a support or a demand zone. So that means if this was taken, so what you expect is that the market's supposed to come down to this point. Okay, so the market was supposed to come down to this point. Now, this is where it's getting more interesting. For the fact that you expect the market to come down to this point does not mean that you cannot find a buy and a sell, because you are going to travel to a lower time frame. But you have it in mind that this is what I call that is 1D UOB. Okay, 1D UOB. That is 1 day, all right, bullish, unmitigated order block. That's the summary of what I've just typed. So then in between, we have this as like a demand zone. You have this again. So all of these are going to be taken into consideration, but you still have in mind that this market probably need to respect this. So these are demand zone. These are demand zone, because the market take a massive move from there, and then you have all of this. So if I mark, you can still have this, because when the market start reacting to this, you have an idea of what's happening there. That's one of the things. Okay, so now we now have to go to a lower time frame, 4 hours perhaps, to have a current, a dealing range where you can now face the market more. Now, remember, we have identified some pivot point. The first we have identified was the previous day high, okay, and the previous day low. Perhaps I think this will be, if I'm not mistaken, I think there's a sweep of liquidity, if I'm not mistaken, because I'm seeing this candle that open, but nevertheless. So in 4 hours, we still have a similar thing on gold. Okay, and just a moment. All right, we still have similar thing on gold. Now, most time we make mistake. All of this point market moving here, you can trade it and make money, but it has not changed from the fact that there were internal liquidity, internal structure. Because the main structure was here, right? Here on 4 hours, that means the main structure on 4 hours happens to be here. This is the market structure shift on 4 hours. And if that has happened, remember what I said. The simple thing is that I take from the low to the high of the new dealing range and to find the market from the 38 to 78. All right. And so the market actually did fantastic return back there, and which here, this is another block, and the market bounced from there. That was a very nice one, right? And then you actually broke a structure over here. So that means we have a large portion of it as another point, another area of interest, perhaps. So if I'm taking from here, so extreme, there's so much extreme move. This is almost abortive, but give and take, the market still react and bounce up and all of that. So after we have this major break of structure again, even though we have some internal liquidity over here. So there are so many places you're looking at the market travel up. This is a break of structure, and then this is a break of structure, and then this is a market structure shift inside here, and then this is the mitigation to the other block, and then this minor market, and then we have this rejection block. And then the market actually had reacted very well. Now, breaking this become an internal structure, right? Because why? We have a low here, and we have a high here, and then this high here, we're supposed to return to so many places. Now, this is this high. Now, because that's why trading is mechanical, and so we have to look at it in that eye. So we have a high, and then, so with this structure that was broken here, we're supposed to have a market return back to different origins. We have different origins here. That's one. And if I can take this one to fairly large in combination of this both, so this is going to be to this point. Then you still now incorporating this, and then you can have the last point down here. So if you don't recognize all of this point, it will take you unaware. So you have to understand that. Now, but unfortunately, this didn't come down. It broke another structure. So that means after breaking a new structure, you were really having this point as another area that market should return back to and trade back up. But you can see what happened there. So the market actually turned and broke that. So here, as this market broke down to this point, you can see that was when it now came down and then used this one as an internal structure and then sweep that liquidity. And there were a lot of plenty fair value gap here and this other block. So the market traveled there. So you must have the eye to look at, because market is hunting from one liquidity to the other and then one other block to another other block, as it were. So here the market has traveled down here. So by the time you go to lower time frame, you can have some confirmation. Here the market came back here. You should understand that here become a rejection or a breaker block, and another side of it, you have a fair value gap from here to this point. And if you take 50% of it, that probably is going to react to this, and the market reacted. So on your own, you are looking at this guy as another point if this place is broken. But unfortunately, it was not. You have this, and then the market reacted and come there. So this is another structure forming inside the structure. Then the market has traveled up here. So now let's leave on that, just a history, but you have an idea where I mapped some of my trade. So now here we are. We have a new structure, and that new structure is here on these 4 hours. So that means this was broken, and we now have a pending high. So a pending high, and every pending high to be broken is a resistance. So you have to understand that. So fantastically, no problem. This market came back here, but there was something that happened. If this structure was broken, it has several areas of like demand zone that the market could come back to and start reacting. And that's exactly what play out here. So if I take out these and you check this one on 4 hour time frame, and then you come back again, you see another one, you come back here, you see another one. Do you understand? Because these are areas that the market could travel back to before now breaking this high. And unfortunately, market decided to be very choppy. But you have an idea in a wider perspective so that you will not get witch hunt. So the market has to return and else daily dialing here. But in a nutshell, you need a break of this. But look at what has played out this morning. What has played out this morning is that you have seen that your previous day low, it's as if it's swept, very tiny move. And so how am I going to get that? I probably will have to return to a lower time frame. So let's go to 1 hour. So very tiny sweep. That's what happened. So in this become internal. So you can see this internal. It becomes internal. Probably if we want to start checking all of those internal structure, returning down, break of structure, right? And then break of structure, you want it to actually mitigate this other block. It came there, return back here, never go down to this point and create a kind of a high, but this is still like sweeping liquidity. And after that, travel down, but we have this as an external. This is a buy side, sell side liquidity was not taking, no problem. Now, but this high was pending, and this high again was another liquidity sweep. So then we have this low here. The market swept this, part of three played out here, makes sense. But unfortunately, we come down to this point. Of course, we have this uh, area of focus. The market traveled down here, they could do nothing. Targeted this one. This low too is still pending. These are liquidity. This will make this market very dangerous. Of maybe any time can just decide to poise down everything. Then we go to 30 minutes to see more. And so in 30 minutes, you can see another power of three that was very powerful, right? And then remember that we still say it's functioning. And this is another internal structure. So a low, a high, a low, another high, a low, a high, another low, then another high, a low, power of three formed there and broke this. But remember, we have this external weighting, all right? So what really happened now is that after breaking the structure, we have all of this point and all this point, internal structure. So if you don't understand how to face this because the market is so choppy, that was what played out here on 30 minutes. All right. So on 30 minutes, the market has slightly, could we say, sweep liquidity or kind of double bottom, as it were. So we expect that, okay, this market need to go up. Probably looking at liquidity to be hunted here. So can hunt this liquidity. If you're able to forcefully break this, you can now say, okay, structure is respecting itself from 4 hours. But if it's unable, then you return back again. And so that's why I say it's dangerous. So look at give and take. You can't have a full force of a trend, but you can have from one liquidity area to another liquidity area. So we have to learn how to pick the trade as they present themselves. So now let's look at on 15 minutes. So on 15 minutes traveling from here, still internal, as it were. So we have this, and then we have this low, but this time around, it formed this to this, and then this to this. Okay, so if that's the case, we still are normal, we're still normal here, and wherever we are, we're still normal here. So that means we expect market to move up on gold. Now, this is why we now say, okay, since the market is just teaching and cheating here and there, is when you now have to go to your psychological level. So if you look at it, this is like, previous day low, very cheap, right? So your psychological level will have helped you out here. I think I was teaching somebody yesterday, telling about probably good to come down to before going up. So where is the liquidity area? So we have a liquidity area here. This is an external, on 4 hours that a high that's supposed to be taken or broke for us to continue to be able to go to the all-time high here and then create a new all-time high. But you can't give guarantee of all of those things. So if we now go to our psychological level, this will simplify the whole thing. So psychological level, go to 15 minutes, 5 minutes, and all of that. So you can see on the psychological level, you can see that you will have taken some market on the psychological level because of, let me take off all of this. I mark all of this point, which was a breakout block, and it's still rejecting from there. Remember last week I was telling us about the breakout block and fair value gap. They are still there. All right. So if you go to 5 minutes, on your 5 minutes now, so in your 5 minutes now, and of course we have this, of course we have this, then you can see that from your 5 minutes, you can have your psychological level. Now, even though your indicator have not given you a buy signal, but it's still working based on this, but you already have your power of three form here, A, B, C. Now, most people wait for the next candle to be bullish above the manipulating candle. So, but I don't wait for that. Once I see accumulation and manipulating candle, I'm in. And this, you have formed your entry this morning. Now, this is the point why most of us lose trade on gold. You don't do market analysis. That's a structural strength and bias before just taking. Yes, fine, you can be taking from the psychological level to another psychological level. But when you have an idea of the structure of the market itself, it's an edge for you. Because right now, this fair value gap is still there. So I don't need to draw them out all the time. But if you can train your eye to see it, it makes a lot of sense. So that means if I have traded from here, I got to be careful. So because this now is going to form like another block here and a demand zone. Oh, sorry, a supply zone. So if this is a supply zone, so the market could get there, get rejected, combined with the fair value gap and align with the psychological level. So there are confluences here, right? Psychological level, all right? Supply zone, all right? So we can sweep liquidity at the supply zone, tap into the fair value gap, and of course, ruled in the midst of this guy, that is psychological level. So that means our entry will have been here, take profit. Now, this is another thing most of us forget, lack of discipline. We said our psychological level, excuse me, we said our psychological level now because it poised to have swept liquidity here because this is another buy sell side liquidity, buy side liquidity. So, but this market is not going to stop, right? Because you have some area of focus above here. So we have the supply zone. So now, but what happened if it's going to create part of three here? That means you want to be trading back to this psychological level, but I doubt the market may have to continue moving up. Okay. Okay. My signal is telling me to sell, but I'm not going to look at that now because there are so many factors. So we have said the previous day looks like the previous day. Just looking, I think I have a place that shows more of previous day lower high or something. So it was taken, right? So the previous day low was taken already. You can see that was when this guy gave a buy signal. The previous day was taken, And just like what I was telling us, here is a supply zone, a breaker block, a fair value gap. So there are so many enemies against gold going up, but you've been here will have bought because liquidity was swept, and that was good. Then we have a pullback into this point, right? That was good. And now if I go to 5 minutes to see it properly. So the guy is already telling us, but there's no psychological level here. Probably wouldn't see. This is a different thing altogether here. Now, so of course, this still maintain a kind of order block for you. And the market had a kind of maybe a sweep on this SI liquidity and poised to come down, probably return back to this other block and become what do we call it? A support or sorry, forgive me, support, right? Or a demand zone, as it were. So look at fair value gap still waiting, and then there's a supply zone still waiting, all right? And these are the things that you want to look at. Okay, so that means my chairman that gave me to sell was actually correct because there was a signal that came, right? Let's look at that signal. All right. Your good alert was trigger, sell signal generated. That was that signal that came. And so if you go back to the advantage, okay, it actually sold. So that means selling down to this point. Okay, so if selling down to this point, maybe what will have given us a very good sniper entry will have been 3 minutes. Can you see now? So 3 minutes will have been a sniper entry because as you swap liquidity here, then you have the power of three. This is a perfect entry. And then you're targeting here. Okay, this is something I actually want to mention. That every psychological level, you heard us in plan B. If you want to trade it, you will have been seeing this. I always say it's difficult for anyone to be teaching and at the same time trading. So now, if you look at it ordinarily, after the low was taken, right? The previous day low was taken. So we still expect that the market travel up to, but nevertheless. So the point again is that if I'm even going to look at this here to make though this is a lower time frame, very low, very ridiculous, you looking at a Fibonacci, but yet that's what it is, okay? So that means if I look at it here, 38, 50, and 61. And then, so if you look at it, the whole range, get back to this psychological level. So now this is what I tell us. For the fact that you are looking at, if the market is so choppy, from here to this point is 100 pips. So this is the case. If I enter the trade here because the market is choppy, and of course you are off season, this is Asia session, right? You have taken, if anyone who woke up around 1 a.m. and all of that must have find some trade, right? Somewhere here, all right? So this is 1 a.m. something 12, right? 12 and all of that. I'll show you how choppy the market was. Now, so if I was entering here, so that means you're looking at the stop loss has to be above this. That's about 29 pips to 30 pips. Now, if you're targeting this point, there are two target profits. The first target profit, which I always tell us that don't be ruling it because it's going to dirty your chart, as this, and which is going to be, so since here is 4210 to 4200, that means the center of it will be what? The center of it will be, so we now say TP. That's where you see those TP we write. That will be 4205. Remember? So 4205. So probably I need to go into the coordinate and then to adjust it to be proper. That's 4205, 4205.00. Okay. So you can change it to red and then okay. So that means the first profit target will be here and the second one will be here. So let's say I enter two positions. I always tell us instead of entering one big position, exactly why you're scalping that you will not be able to control. You have done your basic thing like here. So if you look at it, this is 20 pips. All right, so I can just use my discretion. 20 pips, so 0.1, that is 20, 20, okay, 30 pips. So 0.1, that is $30. So times 2, that's $60, especially if in your prop firm. So where you are doing some of those capping. So if that's the case, yeah, $30 or 30 to $100, you can say, okay, 0.1 will be 30. So 0.1 in two places will be $60. All right. 0.1 in three places will be $90. So maybe you enter two positions first. The first target will be here. All right. The first target will be here. And so if you look at it, okay, so that means we're talking about our 50 pips, because from here, from the major psychological level to the minor psychological level is 50 pips. So why? Because the markets to respect both the major and the minor psychological level. Is that clear, please? So the market, so as we have entered, let's say two positions, and the market is doing what it's doing, you have taken the first TP here and the second TP here. Now, when I will enter the third one, maybe the market reacted and returned back to our entry price and now reject again, you are probably adding. Sometimes you may not have means of adding. Don't bother yourself. One is running or two, and then they are doing. Once the first TP hit, what am I supposed to do? If the first TP hit, because this one are short trade, so pushing your stop loss to the entry may not really work because the markets have a culture of returning back to that entry again and all of that. So, but in a normal trade setup, once TP1 hit, you expect to move your stop loss and break even, that is above or below your market entry, so that if the market return, you have nothing to lose. Number one, you have taken the first take profits. Number two, your capital is now protected, so you still have profits after all. And so that's one thing you see about gold. I know most of us have trouble. We don't analyze gold on a normal market structure setup first before jumping into. If you look at it now, if not for this psychological level, I'm not sure there's anything that will make you to take a trade, even with this 5 minutes. But you can see what the psychological level had showed you. All right. So because ultimately, like when I came in, I said, it's moving up, of which you ought to have been in the market if you follow the activities like this. So that means you ought to have been in the market, all right? Probably here, because from this psychological level, and targeting first here and then the next here. So the next apple here give you another selling opportunity. And another thing I will have to beg everybody is that you don't entertain fear. You don't. You don't. Fear is not part of the game. You have entered just like this one, and the way it's doing as if it's going to buy back. Let it buy back. You have put your take profit. Now, trying to cut it off and all of that, you're going to deny yourself. So if it's the $50 or $60 going to go, let it go. When you will win, you will win. When you will lose, you will lose. These are the things we fail to understand. Sometimes we struggle. It's only some people too, they are fast anyway, where they do that short move and all of that. But I can tell you, you may not have energy to continue to do that again and again. Like some people who do like 1 minute, right? So the 1 minute people and all of that. If you go on MT5, this 1 minute people will have done, because I see people targeting like 10, 20 pips and all of that. But how many times will you be able to do that to say, okay, I entered the market from here, let's say here, and then, right, this is 30 pips. No, it's not going to be achievable for me. So I say I target 50 and 100 pips. So no matter what the market want to do, you let it do. But like I have said, overall, we have swept the liquidity, that's the previous day low. So we expect us to do what? We expect us to go and take the high of the previous day. So now returning back to this point, would that amount to that psychological level we showed? Then after that, or the market's poised to break at all costs and then continue the journey. So, but remember, we said we have another supply zone here where the market could then come to sweep or reject fast and pull back. But ultimately, you're looking at this point today for us to go into. For somebody who have, after the sweep of liquidity here, let's look at something on this 5-minute time frame. So after this, so we have something like this on 5 minutes. So this is a break, right, of structure on this 5 minute. Then you have a point of origin. So down here. So the market tapped into it and struggle up. So this tapping is practically a liquidity setup, an inducement. So because the market came back and now swept the liquidity, so look at it. Most time we are rushing, make us not to see things more better. So this is a sweep of liquidity. And then we have, of course, here, market structure shift. Then this market have returned back to this point and we got a buy. So that buy, of course, you still be targeting this point here. And that's the first point the market got to. So this is a part of 3 that we said here, even both here. Right, so let's say you're already in the trade here. So which means this entry will have been here, although if you go to the psychological level, you see it properly. And then you're looking at the low below the week. And so 1:2, targeting this high. So it was as appropriate as possible. And that will have been how much? Losing 48 pips to make 97 pips. You can see how small it looks like. But if you go back to the psychological level, you are going to see, you are going to appreciate it because there is a demarcation that gives you an idea of why you need to do that. So if you go to the psychological level, okay, so you're going to see that your decision here was not a wrong one. Even at 5 minutes, was not a wrong one. Can you see that? Was not a wrong one. So, gold we still buy today because I said the previous day low seems swept or tap into, whichever name we can call it. Okay, then it was tap into, and then so you expect to now go for the high, right? So here is it, the psychological level. So you see the power of 3. So the market is struggling. Now, the question you ask yourself is that, do you win all the time? No, you don't win all the time. So let's say now I want to just do a sell, right? Let's say I want to do a sell, but I need this candle to actually close. Somebody who has sold here has nothing to do. He has sold, and he has put his stop loss. He's only waiting. It's either maybe you have entered 1 or 2 positions, and then the market 0.1, that will be how much dollars you are aware of that. So okay, let's go here. See this 0.1. So if I'm now selling here, I'm gonna have to be targeting here to say like this. And then, so my stop loss, irrespective as the enter from, my stop loss has to still be above this point. Do you understand? So if I get stopped out, so if you go now to see my stop loss to be above this, that's 421, let's say 4. Okay, so I have to take it to 42. So much. Because someone who entered here, he's also supposed to be 30 pips. Yeah, so 4113, something like that. And then, of course, let's look at this. So, but someone who entered here, the first target will be this that's 4205. Okay, 4205. And then the next will be 4200, something like that. So, but the market just got another part of three here. These are tiny scalpers. Okay, so because let's go to 1 minute, you probably can see it more. Okay, so this seems to be a tweezer up, and tweezer up is a sign of reversal though, which is happening at a psychological level. But you know that the power and the strength of the market is actually up, even though we have some resistance up. So if it's pushing with so much energy, you don't get surprised. So let's quickly go. Let me just say, I want to put a stop loss and take profit. All right, 1.3. So it's a 40 something dollars what I'm going to lose. No, I'm entering late. All right, so I could just use one because my market is not coordinated. So you can see the energy is pushing them at loss of 20 something dollars. Now, so what am I going to lose entirely is 40 something dollars or something. So now coming back to here, where is it? So this is how you lose some trade. The market almost entering to my whatever, and then I lose the trade. It's normal. And that's why we said when you target your trade, one risk to two risk was because somebody who had won here, for instance, here, and then had made the profit because, of course, sweep of liquidity, right, of the previous day low. That was an external liquidity. And now returning back up here, I've told us that on this chart, the market is an uptrend temporarily inside the structure. So you have to understand inside the structure, you're targeting here. Oh, yes, you're targeting here. And you said if we target here and sweep it and break this formally, then we're looking at another thing entirely. So these are things you're doing, but while that's happening, you already have taken the first chunks of profit and targeting the next thing to happen. So you now ask question, what happened? So if we now break this high now, then you have this to contend with. So that means we need to break all of this. Let's go here. So after breaking all of this, then you wait for a pullback to another point of interest for us to buy up. So, but after a sweep of previous day low, you expect the market to have energy to move up. And then so we're targeting here. Now, but for people who have been in the market after the sweep of liquidity and after the sweep of liquidity, which was here, and having this point. So that means the point of interest or area of focus will have been this way. And then that formed the entry here. That formed the entry here. And so this entry here, okay. Now, but the other people entered from here after the sweep and immediate entering. Okay, I must have been stopped out. Okay, so now, so the other people entered here. Look at it. because you have this swing low and a swing high, and you expect area of focus and return back to it. This is another block, right? This is another block, and then the market tap into it, and you are in the trade. And after taking the first profit, second profit, then you have, if this is down broken properly, that makes a lot of sense. You are having this external. But remember, we said this is a supply zone and market will get there, reject. If you reject, the market reject there, you're going to have market reject from there. You're going to have to find, this is like a total displacement, or sorry, liquidity void. So if the market maintains strength up at that, then you expect the market to return that. So let's keep our finger crossed. So what do you expect? So you expect this supply zone to be swept and return back to the void for another buy. So that's something like this to happen. See what I said? When you are doing analysis, taking trade is a wrong thing because you go to make a wrong judgment. So if we have this, then probably looking at this high or returning back to this point or area of this region, then before you can now have the next move. Invariably, you are still poised for more buy. Supply zone, previous date low, liquidity swept, and taking this supply zone, pull back by ultimate target here. Now, ultimate target here, and then break this structure, make a lot of sense. That means for this week, we'll be dealing up. So this is long overdue for us to get out of this struggle. So I think enough on gold. Let me quickly, so Bitcoin, I'm expecting at 94, 95,000, like I said yesterday on Bitcoin. So if we go back to Bitcoin very quickly. So let's take out all of this. So we have Bitcoin, and of course the travel we had on Bitcoin. So let's go. So as usual, this is daily. So we have this high of the previous day, and we have this low. So now looking at the structure, so looking at the structure, Bitcoin, so we have a major low. So I told you when I open the market, look at the market had a massive move down, and we have an up move here. That's on daily time frame. Okay. So you have this again, the break here. Before that, a shift entirely. And so we still have this as a mitigated order block. And if you measure from here, this point, 38 to 78 is like your dealing range. And so we broke a new high. So we have this entirely here. That was so broad. That was so broad. However, since this is the new dealing range and you anticipate an up move, 38 to 78, you're still in order within the order block. So we have some level of challenge here. Just pray that Bitcoin is not going to do the same thing like gold. Because why? So we've returned back here. That was nice enough to the golden ratio or golden zone. So, but this other block so broad, and of course, maybe in the market of returning down. But before that, you find your entry, and that means you're actually stepping down to a lower time frame because that's going to give you this. Even back to this point, but if you want to just take a main zone, some take only 50 and 61, right? So, but sometime when I'm trading, I look at all of this point because gold as it is will do you anyhow and then push you off. And that's why I say you don't do analysis and trading. You certainly will lose one. I'm sure now if you go back to gold, that my trade I took, that probably have taken me out. May still sell, but because of not concentrating to see more. All right, so now here looking at the market, the Bitcoin. So I take and go back to 4 hours. All right. Now, if you look at it, the market is pushing towards breaking the previous day high. But what are we going to have? Now, on 4 hours, it was a beautiful setup that many do not really understand. Now, so because why? The market had an up here and then broke that, will return back here, but we have this other block to become a demand zone eventually. So market break a new high here, which is normal. Then we return back up here. So you have the markets to come back to this region using the 4 hours. Look at it. All right, using the 4 hours, you expect the market return back here. And after all the inducement, the market actually poised down. So we have this, and that means I'm not going to go back to all this because if not, what make market react here was 50% Fibonacci retracement, and at the same time, we have another block that was represented. So I don't want to go to those stories. So, but here, looking at after we broke this up here, then we actually have this as another block. But there's something crazy in this other block. What happened? We have a kind of IFG, that is inversion, fair value gap. So we have this fair value gap. that markets will either come to mitigate the other block or react at the fair value gap. That was a very nice one, right? And that means we have a pending high that we need to take out. That pending high can be a resistance. Remember, I said Bitcoin, I'm looking at $94,000, 94, 95. So it can be a resistance, and then we drop. And why could that be? Because we have at the point a break of structure, and have another block, so that can counteract this. So the market could tap into that and drop. So going to 1 hour, yeah, the 1 hour actually struggled, and because of the fair value gap, after much this, then we have a displacement, and that was yesterday. Massive displacement, and market gravitate up. That was a nice one. So we're looking at this is a real day high. So if we're going to be taking this and return back, we don't know yet. So that means if I'm on Bitcoin, you want to watch to see if this is going to be taken out. All right, so let me look at on 30 minutes. Remember, to Bitcoin, we have psychological level on Bitcoin. Excuse me. So we have this already in the high. So this is a low, probably marking this point. So that means we want to see that breakout reject. And so you have to be patient. Can I buy now? The answer is no. All right, so that's about Bitcoin. So targeting 94,000 region and probably have a rejection or break it and retest, and we can go to 107, 101, 107, 111, and all of that. Okay, so let's quickly do a few currencies as fast as possible. Yeah, so Euro USD. So we have DXY. I talked about this rejection yesterday. And so Euro USD, I expect the move up to an extent. All right, so GBP USD. I just hope there's no, okay, today's Monday. I'm not sure there's any fundamental. Okay, we still have a pending move of this market to come here. So it's a very big gap here that is highly disturbing. And again, they show some kind of power three, and this is a liquidity void. So I don't know when this is going to be filled, but it's a concern to be worried about. This guy, one of the things is that if you are trading currency, like I've said, you have to be patient. There was a trade like I think I was sleeping last week, miscalculated, was USD card, where we're supposed to be selling, we're buying. So if this market is going to confirm sell, which was from here, we said we're supposed to return back here, but unfortunately, the market, I was not comfortable because I look at the breakout block and that was going to be rejecting, and it did. And then we now say, okay, we'll have a last hope here for the market to bounce from here. If not, then the market should be traveling down very well. And if it start traveling down, it's going to travel for a very long time. Okay, so what then should I do? For this, you probably want to have a break of this point. I'm taking out this and a pullback before a massive sell. It may take few days. It may take few days. Let me look at USD JPY, I think. Okay, I think I have a target here. And I think the market is on that point, but is there any confirmation yet? Absolutely no. So you can see how market sometimes you want to just find a buy at all cost, and it will never happen within that time you are expecting. It was this market. Quite unfortunate, right? Oh my word. That's serious. USD card. And I'm not sure it has gotten to a resting point. So I explained what really happened here. Break of structure. You have this low here. This power of three give move. So that's why when you come daily, not to stress yourself, you find a power of three, you want to act on it, especially at a very key level. So have that here. And that was a massive one to target this high. And it broke out of that. Now, so this, if you're targeting this low, this one going to be disappointed, or except if you're targeting 1:2 risk reward sometime. Because currencies have no so much problem. Be on a trade as long as possible. And so if you look at the power of three here, so this is the close, and then this is the stop loss. So your stop loss going to be how much? 31 pips. So if you're targeting 1:2 risk reward is fast, but you will definitely be looking at this down here. But of course, 1:2 risk reward is cool here. This 1:3, 4, 5. So I always save myself from the stress. You have another power of three here actually formed. Remember having a rejection towards this initial high. And so that was a very beautiful one. Now, but not everybody will settle down to see. Then that shows here. And then instead of the week, it will be total here. So that was about 50 something pips. And if you take it here this way, 46 pips thereabout. And now, so the first target will be this low. Then you can see it took some days. Okay. And then the next target will be this low. That's 1 point. So the next target will be this low. You understand? And this is another key level. And then the next target will be this low. You understand? So, and I think the market rebalancing suppose to return back to that low. I think so. That's it. And probably sweep this liquidity to rebalance a new market stretch hold. And afterward, so that means from here, this is going to be a total rebalancing. I think so because, oh my word, that's exactly what's going to play out. Go from here to here, except for a total move here, which I doubt. So except for, all right, a bounce from here, which is now going to still go back and sweep this high. If it's gold, that's how it behaves. You're going to sweep this high and then take up the market back up. But you can see when you come on daily and look at your chart, you want to figure out power of three and establish from a major point of whatever. That has played out here. That has played out here. Not that you're not going to lose trade. That has played out here, right? That has played out here in that order. Oh, gosh. So I think this one is very useless to an extent, so because you can try your patience. So like I said, just allow it to return back here. Or if you can go to lower time frame to see what's it playing out. You can see how margin struggled since last week. So you expect it to return back here, this fair value gap. It never did. And perhaps maybe want to now return back there. Who knows? Right? So look at gold that stopped me out now. Let's see from the psychological level. Think I was trying to put it in definitely this cell was taken out. But I was trying to put in the next psychological level because that should be resistance, which is supposed to be 4215, all right, something like that. But I'm sure it must have been stopped out by now. Oh yeah, so it has been stopped out because it's supposed to target the next psychological level, was supposed to be 4215. So and even on 15 minutes, power of three still played out. So still bent at touching the ground before the bounce. Called the previous day high, low taking. Was it here? I think it was here. But nevertheless, don't forget that the market's crazily choppy. All right, I think I'll have to pause here when I refine the market by 6:30. And this, if there's any entry, we post it. But always look at the structure of the market before taking a trade. And then I think I did some, okay, I think those for the people who were trading on synthetic last week. I posted some signals for them. So you can see how, you see now, you see how the market can be very funny. Now, but the truth of the matter is that you can be doing analysis. I'll be taking a trade. You already have your structure set properly before you now decide to be taking an entry. And of course, while you're already on a particular trade, you're following that trade so that you maximize everything out of that trade. Those are the tricks around a trade. So eventually, when it delivers, then you. So definitely, so if you are here, so you may now say, what do we do? You are targeting the market to either come back and then have a support here at this minor psychological level or this major psychological level. At this major psychological level, so you are still buying. But remember, we still say these are supply zone, and the supply zone is tend to be resistance, just like having demand zone tend to be a support. But I don't think anything from here or from here targeting up here is a bad deal, because this is a fair value gap. But see, if they take the market here to this point, that's 200 pips. From here to this point, that's 150 pips. That's big enough. Now, if all things being equal and we have a rejection and pull back again and forcefully pushing up, remember what you said here for the same gold. We talked about the previous day high and low, right? That has been taken after the pullback. We want to take out this high. All right. So that's the basic thing you see to the market. Very funny. You rather use this one to create a liquidity and take it that is in displacement. Displace this liquidity and now selling down to this and to this point. After here, you are looking for a buy. So you are watching. So when you come back, check when the market return back here and reject. If you show a part of 3, here you are buying. But ultimately, we expect the market to come here for you to buy. Can I sell now? No. Wait for a buy. All right. So far, this is what we have. And then, like I remember, I said that 6:37, from 6 a.m., 6:37, 7:30, gold has major move and all of that. So if you're struggling here now, maybe at that time you are going to find opportunity of buying. But nevertheless, if you are still in market and monitor, even before that, see the market come here and reject, or come here and reject, and then maybe part of 3, something similar to this, what spotted this buy, then you can now buy a position up, targeting here, here, and here. And if eventually this is broken, you want to see another dimension of the market. All right, so that's what it is, okay?